Hey everyone, morning and welcome to Benzinga's All Access. I'm Johnny Rice this week, filling in for Michael. As you can tell, I'm not him. We got a great show this week. We got a lot of guests on. It's a holiday weekend, so we had some scheduling issues with some of them, but we got one pre-record and a bunch of live interviews. It's been a crazy week. As always, we're here on Friday, though, December 9th, and we're ready for a great show. So I'm excited. I'll be your substitute teacher for the week. So as any good substitute teacher, I'm going to sit here at my desk and I'm going to go ahead and play a video. So without further ado, here's the intro. Hey everyone, welcome back. So first things first, we'd like to respectfully ask you to hit those like buttons, subscribes, and I've got a little disclaimer for you. So this is the way that Benzinga monetizes this channel. So these guests have paid to be on the show, but I can assure you that they have not seen these questions. They're still live. And if you drop your questions in the chat, we'll do our best to get those to the guests. But these are live and ready for you. So we are going to start off by talking about our sponsor, Ticker, who is really been a great partner for us and this show on All Access. They're a really cool company out of Detroit, and they're doing some really, well, they're really innovating a whole category. So they can do a better job of explaining it than I can. So let's roll the Ticker intro and pay close attention because it's a cool company.
What is Ticker? That's right, Ticker with two I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Welcome back, everyone. That was Ticker. Once again, Ticker is our sponsor here. They're a great company. Please check them out. They got these really cool rewards for owning stocks. It's a cool company, so check them out. All right, now that we got that out of the way, let's start off with the interviews. We got our first live interview up. Really excited to bring this guest on. This is Kevin Vasily. He's the CFO of iPower. That's iPower. They're listed on the NASDAQ under IPW. That's on the NASDAQ IPW. Hey, Kevin. Welcome to the program.
Good morning. Thanks for having me.
Yeah, it's a pleasure to have you here. How you doing?
Good.
Cool. Well, let's start us off. Give us an overview. Who is iPower? What do you guys do?
Sure. So iPower is a leading supplier and online retailer of consumer home goods. I think most people know us for our hydroponics line, but we've got a rapidly growing line outside of hydroponics that includes a number of consumer home goods, home and garden products, consumer ventilation, and storage products. We, because of our legacy in hydroponics, tend to get comped against, companies that supply into the commercial hydroponics industry, companies like Grow Generation, Hydrofarm. I think there are three kind of major main differences between us and those companies we get comped against. First, our market. We are focused solely on the consumer market. So if you think about hydroponics, that would be kind of the DIY hobbyist who is looking to start a grow project in-house. People we get comped against typically are focused on the commercial segment. Second is our product line. 80% or more, depending on what quarter we're talking about, of our sales comes from our in-house product line. I contrast that with those companies we get comped against, who are closer to 25 or 30% of their overall product coming from their own in-house brands. That really helps us on the margin side. Our gross margins have been in the last 4 quarters between 38 and 45%, and that's tends to be about 20 percentage points higher than the companies that we get comped against. And then finally, channel. Right now we're largely distributing our products via e-commerce. We have partnerships with Amazon, with Walmart. Close to 95% of what we do is online. That will change over the next 24 months. We've got multiple discussions underway with some of the more traditional big box home and garden DIY retailers, which will alter that mix. But right now, we've really carved out a nice niche in online retail. And the last 2 years with that strategy has been very successful for us. We in fiscal 2022, which just ended this past June, we grew our top line over 47% to just under $80 million in revenue. And that's after a fiscal 21 that grew 35%. One other statistic I think is worth noting, I mentioned earlier that one of our differentiating areas is our product line. Our in-house products grew over 60% in fiscal 2022. So our in-house products outgrew not only our overall top line, but grew well in excess of the market that we get comped against a lot. So, it's been a pretty good 2-year run for us as a public company. And we're pretty excited about what's going to happen over the next several years as well.
Well, that is exciting. Those are some impressive numbers, which we'll get to in here in a second. First, I want to ask you, you call you guys the most trusted and convenient online provider of hydroponic equipment and supplies. So can you talk with us, like, how do you go about actually doing that? How do you become the most trusted?
Well, so, the ecosystem, let's use Amazon as an example. The ecosystem in Amazon, I think, is an interesting one in that, consumers can go and do, organic search on that platform and quickly find products that have good reviews, that in a lot of cases are listed as Amazon choice products. Our relationship with Amazon is maybe a little different than I think a lot of people might understand kind of what an Amazon relationship would be.
How so?
I think a lot of people, when they think of Amazon, think of, third party marketplace. You're kind of renting out a mall storefront in Amazon's large mall. However, Amazon is, very much like in our category, very much like a Home Depot, yet instead of being a bricks and mortar retailer, they're online. And so the majority of the work that we do with Amazon is in a wholesale relationship. So Amazon buys our product, and if you went to search for one of our products or in that category, you might see our product as sold by Amazon and fulfilled by Amazon. So I think we've seen the consumers feel a little bit more comfortable when they see a sold by and fulfilled by Amazon. I think one thing that we'll say though is that we also have a fairly sophisticated fulfillment back end as well. There's a high likelihood that if you were to buy that product that that hypothetical product that I just mentioned, and click to buy, high likelihood that that product would be routed to our warehouse in Southern California, would be put into an Amazon box by one of our kind of warehouse and fulfillment managers, and loaded on an Amazon truck that afternoon at 4 o'clock.
Huh.
to be delivered via Prime the next morning. And so, to the consumer, it's seamless. But, it's those kind of blocking and tackling things, as well
Mm.
as, Amazon listing us as a number of uh, choice products that, builds that trust with consumers and creates that really positive flywheel of experience for consumers are coming back, and new consumers are discovering us.
It's amazing how much goes on in the back end that consumers don't
Yeah.
even know about.
Yep.
Well, we're talking about online retail, and that brings me to my next question, because you guys also describe yourself as a data first company. How so?
Yep. So, in the preamble that I mentioned, I noted that over 8% of our sales comes from products that are our in-house brands. So, when I say in-house brands, I'm not talking white label. We work with contract manufacturers and co-engineering partners to design, the majority of the products that we call in-house.
Okay.
And to do kind of product development, we've felt that the best way to identify product categories, niches, product attributes that are going to sell in volume that makes sense is to do a lot of kind of data work on the front end. So we collect terabytes of data, both from public and private sources, on a number of product attributes and categories that we're interested in. Pricing, volume, any kind of discounting that we see in the marketplace. And we also collect quite a bit of information on customer preferences. So as you might imagine, in customer reviews, there's a treasure trove of comments on what consumers like and they don't like, and what they think is missing.
Mm-hmm.
And all of that kind of gets fed into, for lack of a better way to describe it, an algorithm to figure out, okay, if we build this product at this price, by adding this attribute, can we take some cost out here? We can get a product with a margin profile that's attractive, that we think has a high likelihood of selling at volume. And that's been the approach that the company's had for its 12 years of existence. One thing I'll note is that the two founders of the company were software engineers. So, they've, from the very start, taken an angle on running the business with that kind of tech lens. And it's, really helped and benefited our opportunity.
That's really interesting. So do you guys build those programs out yourselves, or do you contract that?
So quite a bit of it's done in-house. But there are some third-party tools that are available on the marketplace to go out and collect data. And there are also data sources that are already kind of pre-packaged and organized that we subscribe to, that are additive to that whole process. But yeah, quite a bit of what we do was developed in-house.
That's really cool. So you guys have a whole family of brands.
Yep.
So why go about it that way? Why not sell through one brand? Yeah.
That's a good question. I think the iPower brand, it's the corporate name as well, but the iPower brand has largely been associated with hydroponics. And I think we found over time that kind of brands that are in adjacent categories but are not directly connected with hydroponics, maybe get positioned a little bit better with a complementary brand versus trying to run everything under the iPower brand. So, one of the brands that falls into that more consumer goods category is called Simple Deluxe. And I think the name kind of conveys, a lot about what we'd like to try to do with products. We want to simplify the process for a consumer, but make them feel like they're getting a really good value and potentially a deluxe experience with a really fair price. And so, some of the work we've done found like that resonates better than something like iPower for a consumer home ventilation product, like a floor fan or a wall fan. So it's it's marketing, it's part of that. But I think for us so far, it's really worked well.
Well, I'm quickly just curious. One of those brands sells pet supplies and pet toys. How does that have to do with hydroponics?
So if you go back to the comment that I made about categories and data and kind of decisions to get into adjacent or other categories, we work with over 100 manufacturers and suppliers in Asia, and a number of them manufacture for other product lines. And so we've had multiple of these manufacturers come to us and say, wow, you've been like killing it with these products in hydroponics. By the way, we manufacture this as well. Is there something there? And then we send the data team off on a little discovery mission and say, is there an opportunity? We've got a good relationship with this supplier. We know that if we give them enough volume, we're going to get a really attractive price, for us on a cost of goods sold basis, and we investigate. So, that's a natural kind of outcome of the way that we work with our suppliers and contract manufacturing base. And yeah, it's not related to in any way to hydroponics, but it was an outcropping of how well we've done in some of those categories that we're more traditionally known for, and having those manufacturers come to us and say, hey, help us out here. We're having trouble selling these. Maybe you can work your magic, so to speak. And
well, it speaks to the relationships you build with your manufacturers. Which actually, so that brings me it brings me back to some of the numbers that you were talking about, because you have some really impressive ones. 50%, I think, year over year revenue growth for the quarter. How did you go about achieving this, and can we expect this to continue?
Well, we don't give guidance as a smaller company. We want to kind of avoid getting out kind of too far over our skis, so to speak. But I think historically we've grown the company somewhere between 25 and 35% on an annual basis. We've had some performance that is at the high end, if not a little higher than that over time. This last quarter was a fantastic quarter for us, partly because we've got a lot of traction in our non-hydroponics business. In the quarter that ended in September, our non-hydroponics line is now over 50% of total sales. And so that's up from well under 50% in the prior year. So we're getting a lot of success with these new lines. And I think, in some ways our partnership with our channel partners is helping there as well. I think when you have a wholesale relationship with someone like a Walmart or an Amazon, if you've got a track record of bringing products onto that marketplace that they find have a really, really strong demand curve, they're very much likely to work with you on new products that you introduce. So, Amazon was very, very critical in kind of the strength of that top line growth in the most recently completed September quarter.
Now, in the same period, you guys did report a net loss. So can you talk about this as well?
Sure. So there were a couple things going on. So if you've been following kind of the very volatile shipping and container costs that have been going on in the any of the industries where you're bringing product from Asia and importing into the United States, there was a period right after the beginning of the year this year where you saw record container costs. In some cases pushing almost $20,000 per container. Some of that was, I think, a function of some of the bigger retailers sucking up all the supply in the market. So the container providers on the margins could, really inflate their costs. That as well. One other thing I should mention there too is that shipping times across the Pacific were also at kind of record levels. So to get inventory, especially ahead of our strong September quarter, we had to get inventory into the country. And in our business, if you don't initially kind of meet demand for your channel partners at a product launch, their likelihood to want to work with you goes down. So we ate pretty high shipping costs. The other thing, to stock that inventory because of the long lead times on ship times, we also had to incur some costs for temporary warehouse space to house that product. Those things are largely in our rearview mirror, though. Container costs are down, below actually pre-COVID levels.
Okay.
So as that product comes across the ocean and then finds its way into our warehouse, that ship cost burden is going to fall. The other thing is, with ship times falling too, the amount of inventory we have to carry will go down, and we won't need those. Temporary high cost warehouses. So our expectation is our cost side will normalize over the next year, and we'll be back in the green, so to speak, when that all flows through the income statement.
So I'm curious with these shipping costs. I mean, over the last few years since COVID, I mean, we've seen so many issues in the supply chain in general, especially out of Asia. And I know you have partners in China, correct?
Mm-hmm.
How do you see the whole zero COVID policy impacting manufacturing in China? Do you think, and how do you think that's going to impact it moving forward?
Well, I mean, it was a huge challenge for anybody that was sourcing product, particularly in China. I think for us, because we had established such a large supplier base, we had for our critical products, maybe the best way to describe it is triple redundancy. So if our primary source went down because they closed the factory for COVID issues, we had a backup, and then there was a backup for the backup. I don't think a lot of companies our size had that same setup or luxury. So it allowed us to navigate fairly well. And we did have some disruptions, though. We also had some suppliers who during COVID saw all their other business dry up, and while we were bringing on new suppliers, a lot of people were not willing to extend payment terms, wanted cash up front. So we had to manage kind of our working capital a little differently. Going forward, it feels like things are starting to change. I mean, I think the news, and actually my CEO is in China right now meeting with suppliers. It feels like there's going to be a fairly rapid relaxation of these zero COVID policies, which could help get things back to normal. But we, that's knock on wood. I think things change very quickly.
Sure.
It very much reimpose those restrictions.
Yeah.
Overnight. So we're optimistic that the worst is behind us, and like I said, I think we felt very fortunate to have been able to navigate that as well as we did, given our size.
Well, we're unfortunately running short on time, but I want to get one last question from you.
Sure.
And I'm interested. So there's been a push in recent years for kind of localized farming, right? Like especially in terms of environmentalism, like it doesn't matter how green your growing practices are if you have to ship it across the country, right? So we've seen a lot of a boom in kind of like urban farming and vertical farming, all kinds of things like that. So how's that changed the demand for hydroponics?
Well, I mean, it clearly has an impact on the commercial side. There are a lot of companies that are going down that path. We've seen the benefit of that, though, from an individual consumer basis, right? When people had called more time on their hands when they were sitting at home during COVID, rediscovered gardening and rediscovered that you could, grow fruits and vegetables in your house in a little grow tent or a corner of your garage if you wanted to, given the technology that we could provide. So we saw that, and we're going to capitalize on that trend. We don't think that discovery is going to go away. People are going to get bored with it. We're going to bring it to market a product that is essentially a countertop appliance that allows you to grow, leafy greens, herbs, other kind of small vegetables in a device that will fit, on your kitchen counter. We know there's demand as a fragmented market. We're using our data approach to bring to market a product with the right attributes that people have been asking for, and we're pretty optimistic about that. So we're going to ride that wave as well. We think it's a really interesting and should be fruitful, no pun intended, business for us.
Well, thanks, Kevin. It was a pleasure having you on today, and look forward to seeing what comes out of iPower in the next year.
Great. It was a pleasure to be here. Thank you so much.
Thanks. Take care.
Bye.
All right. That was Kevin Vasily from iPower. And up next, we have John Keeler. He's the CEO and chairman of Blue Star Foods. That's Blue Star Foods. They're listed on the NASDAQ, BSFC. John, welcome to the program.
Thank you. Good morning.
It's a pleasure to have you. How you doing?
Good. Well, thank you very much.
That's great. So to start us off, what does Blue Star do? Who are you?
Well, who am I? Oh, actually, Blue Star Foods us.
Who is Blue Star?
Blue Star. We are a land-based. Primarily, we're shifting to a land-based seafood company, aquaculture seafood company. In other words, I try to get away from the technicality of the lingo that we use for the audience. We are pretty much like an indoor farming seafood company, as well as a processor, importer, distributor of seafood products sustainably, such as crab meat, pasteurized crab meat, under different labels.
Well, that's great. Let's talk about your management team then now. What do you guys bring to the table?
Well, what bring to the table is the average management team in the company is been here for close to 19 years. We are actually have seen we're pivoting from a small scale fisheries into a land-based aquaculture. As we seen that the numbers on wild caught products continue to dwindling over time. The seafood consumption continue to increase, and the tendency will be by 2050 will double. And then what management have done is with being 19 years in the company, with this company has been 27 years in the making. It brings a wealth of knowledge of compliance, new driven technologies that we have acquired, strong distributor partners in the food service and the retail sector, as well as patent technologies that we own, and very strong brand equity in certain brands that we carry over the years.
Well, let's talk about some of that technology. What is aquaculture, and how is your technology different?
I'll say the technology for us is different because we grow fish and we do soft shell crabs. So let's talk about the generality of growing fish or growing salmon, to say the least. Our technology that we have acquired is been in effect since the last years, and that is what we call a modular technology, where we can actually replicate what it really is being proven and put it in a much bigger footprint of land and increase the output of those farms. I think the technology is, I won't say is not complex, is relatively simple after you learned the what really works, and being able to to grow those fish to his full-sized commercial harvest size with very little mortality, single digits, and be able to ascertain a good feed conversion ratio. Conversion ratio is very important in proteins. For example, in cattle, you need 8 kilos of food or feed to really get 1 kilo. Let's call it pounds. 8 pounds of food or feed to get 1 pound of meat. That's it. So while in seafood, we're able to do 1.3 times a pound. So 1.3 pounds for 1 pound of fish. So that's the things that for us is quite compelling.
That is definitely much more efficient, and that ties in really to sustainability is really, from my understanding, at the core of what you do. So talk to us about how that guides you in your culture, and also in practical terms, how are you a sustainable company?
Well, it's easy to say they're a sustainable company, but if you don't measure it, you're not.
Mm-hmm.
And in every activity in the world does have an effect on the environment. However, for us, very little effect to none, such as we recirculate the water we use. And the waste created from the fish, we actually use for fertilizing. Also, the power that we consume is coming from hydro plants, not from coal burning. And those are really the things that really get us into a more circular economies to get that. Now, that's when it comes to sustainability. Yes, you talk about the environment side of it, but you also have to look about your social, what kind of the social impact you have, and what are the governance impact that you do for the companies. So, but at least we're going to concentrate on environment. That's really at the end of the day what we're looking for to do is like how we can just hatch a small little egg and get them all the way to 2.4 kilo fish with a very minimal to no footprint. And it's a matter of fact, by late this month or beginning of next month in January 2023, after it goes through the proper audits, we're going to actually release our sustainability report, and it'll give you the exact amounts of water that we use and things like that. I can give you some preview if that meant to be, but I think that it will be more compelling for the investors to really go into our website and look into those things.
That is really incredible, because a lot of companies certainly talk the talk, but not everyone walks the walk. So that's awesome. Let's talk about numbers, though. So in your last report, Blue Star had a $10 million revenue year to date. That's up 28%. Can we expect this to continue?
Yeah, we're expecting to continue throughout, roll forward, 12-month basis. We're actually expecting to end, near or close between 12 and 13 million. And that'll put us in about that same average percentage growth. For 2023, we should be on and about $15 million and continue to. So at the end of the day, we have pretty much like three silos. One is our legacy business will continue to grow through pre-pandemic net revenues. Also, as we grow the output of actually build new farms, by 2025, we're actually going to have a much imminent revenue growth. And also, if there are opportunities on the M&A side where we can acquire generational seafood businesses where they may have, but they should have a particular species that they remain competitive, in which we can use our technology and also harvest that fish or that species on land. So those are really the three silos for us to grow our revenue going forward.
Well, it sounds like a promising next couple of years. Let's talk
couple, probably say 10, 20 years, because you need to eat every day. By 3 p.m. you haven't eaten anything, your headache is going to dominate you, right?
That is very true. Let's talk same report though. You did post a 6.2 million net loss. So can you talk about that? Explain it. What's this attributed to?
Yes. Well, you have in there you have accounted for non-cash expenses, some balance sheet hit, not necessarily on the P&L side, on impairments. And but if we're going to go into the cash on cash basis, we did have and will continue to foster that, which is the first, what we call it, the first stage of growing these bigger farms, where you have engineering cost. You do your bio plans, and that's actually, you need to have experts to be part of it. So you have to, include those professional fees cost in it. We also in the third quarter predominantly, we have to fight very hard on the in our legacy business to retain and renew a few contracts that actually we informed the public, and we have to really give a good discount for some products in order to refresh the contract itself. The overall expenses on the operational side, it remains relatively consistent. Nothing really major. Again, it's mostly on the expenditure that we cannot put it as an asset on the first stages or these new farms. You have a new farm to be built on salmon and one for soft shell crab.
Well, let's talk about those new facilities, and especially the South Carolina one for the soft shell crab.
Yes,
actually,
my favorite.
My coffee mug today is a
awesome
crab. That's a really exciting project you guys got coming up. So tell us about that. Are you on track for that? And once it's completed, what does that mean for the business?
Well, for me, on track is plus or minus a give and take a quarter. What it means, the unit economics for the farm is we are taking our current 130 tanks to 10 times.
Wow.
And it's gonna at a full capacity will actually generate about $11 million in revenue, and give you an EBITDA approximately of 44%. The cost of the farm is about $15 million all in, and your ROI is in about 4 years. So call it 3, but let's say 4 just for the heck of it. And it, personally, for me, is the one that I really see quite more compelling. Me coming predominantly from the cramming business.
Yeah, that is really exciting stuff for Blue Star. It's going to be an exciting, like you said, hopefully 10, 20, 50 years. Let's talk about your deal this year. You extended a deal with Cisco, which is, I think, the world's biggest food distributor. It was the supplier for my hot lunches in grade school. So
okay.
Got you there. Can you walk us through this deal? And I understand it's an extension of an existing deal. And what does it mean to be partnered with Cisco?
Well, it means a lot because when Cisco have you as a partner as a category manager of a species of a product, it means that you pass the most stringent requirements for compliance, food safety, sustainability, and more so, they do truthfully see you as a reliable supplier. Because those guys do not want to hear that you don't have it.
Sure.
And those are actually probably the highest ranking that you can really do when it comes to distribution. And you really earn that over many years of work. Okay, so this is not a company that say, okay, we have a new technology, we're going to do this, and we're hope to sell it to such. No, we do have the sales channels. We've got to build the farms. We have the product sold, especially when they are social licenses being canceled by certain governments where are actually cutting down the output on oceanic aquaculture of salmon, and that needs to be replaced because the consumption continue to increase.
Well, that's a perfect lead in, because I want to zoom out and get your opinion on an insight into the broader market. What is the difference, or what kind of trends have you seen in the broader regulatory market across the globe, and maybe specifically also in the U.S.?
What I see when it comes to, let's divide this in three buckets. I'll see wild caught, then you have aquaculture in the ocean, and you have land based. Okay, let's call it, those are the three main pillars. When it comes to wild caught fisheries, I have seen that finally, regulatory wise, governments are no longer doing subsidies to small scale fisheries because finally they realize that actually promotes IUU. IUU means illegal, unregulated, and underreported fishing, and that's the biggest culprit of seeing less fish harvest year over year, or overfishing, you want to call it, and the byproduct, because you go and fish, one species, but you end up with many others with you, with no particular market, and then you just simply kill it. So I have seen that also. Big companies are now really relying on traceability to prove that a particular species is being harvested responsibly. I think there's many things to do there for years to come. Also, I have seen that in the small scale fisheries, where there is certain species that their season or are not being opened or being canceled by government. Everybody, as of late, know about snow crab season in Alaska. They got canceled for the first time in 100 plus years. But they didn't tell you that the king crab season actually got canceled for the second year in a row. And then no one is telling you that the snow crab is not going to really see an improvement until probably 3 years or plus. So there may be no further, the next season will not be open again. Once again, I'm giving you guys my view on that.
Sure.
There are other species that the seasons are being closed down, that you guys don't hear about it. So there is an effect that there's less and less fish. You know that if we don't do anything about all of this, by 2050, about 5% of the population will be able to eat fish daily. That's it.
Wow.
Simple as that. So then when it comes to the other bucket, or the aquaculture of species, let's talk about salmon in the ocean. There are two big moves going on the government side. One of them is the cancellation of the social licenses especially in British Columbia. We've seen some of that. And what it is enough for keep fishing, or keep cultivating fish in the ocean, which have a negative effect in the environment. Tons of antibiotic being used, a presence of microplastic, escapee of culture fish and blend and mixed with the wild caught, and those are actually much bigger fish than the wild caught. And also in Norway, there is an increase in tax from 22% to about 62%. So pretty much the message is, guys, stop. Pretty much, we're going to tax you now. No longer you're going to be able to use the ocean for free. So that's, at the end of the day, all of us are going to pay the price with the higher cost of food. And in the land base, we've seen governments that they actually want to transition from the open net oceanic aquaculture to land-based aquaculture. So that's a pretty good move for us.
Well, John, we got time for one more question.
Okay.
A real quick question. I'm curious because, of course, a lot of people fear that we're headed into a recession, and if we do indeed on a global scale or just in the U.S. hit a recession, what do you think that does for the seafood market? I mean, a lot of people would consider consuming fish luxury. So does that impact you especially?
I don't think that fish is no longer considered as a luxury. Maybe some species will be, but not in the one that we are. What it's going to do is going to rationalize the profitability among all of us. But at the end of the day, there is more, it's been an increase in consumption year over year in seafood. I think the commodities will actually taper down in pricing and find a new high level from pre-pandemic numbers. I don't foresee that people just gonna go and start eating only pasta when there is a huge movement of pescatarian, of younger people like you, even younger than that they just want to eat fish and not meat.
Yeah, well, it's true. Actually, I have vastly increased how much fish I eat over the last couple of years.
Rightfully so.
I'm your target demographic.
Yeah.
Well, thank you.
I think we'll open. Let me add just something. I think we'll open a door for more M&A transactions. Some acquisitions will be an increase on acquisition activities throughout the seafood industry.
Well, thank you, John. This has been really illuminating. It was a pleasure to have you here, and I look forward to the next time you're on here.
Absolutely. Thank you kindly for having me, and have a great weekend to you all.
You as well.
Happy holidays.
Take care.
Bye-bye.
That was John Keeler. He's the chairman and CEO of Blue Star Foods. It was a great interview. And up next, we have a pre-recorded bit. This is the CEO of Israeli Subsidies of Safe Foods Limited. That's listed on the NASDAQ as SVFD. That's Safe Foods SVFD. It's pre-recorded. So Aaron's going to roll this and take it away.
And welcome here with another pre-recorded segment and interview with Dan Steibel, the CEO of Israeli subsidiary Save Foods. Most of the team is out in New York City this week, so we're getting this exclusive access to Dan before we actually head out of town, and we're able to get this ready for the All Access event that you're now viewing. So we're going to go ahead and move into an interview with Dan Steibel. Let's bring him on and get started. Dan, great to have you with us again. How are you?
Hi, good. How are you today?
Doing great, Dan. Again, a real pleasure to have you here. This is the second time we've actually been able to do a pre-recorded interview with Save Foods before an all-access appearance, which is great. We love being able to have that access, and obviously technology gives us the ability to get these interviews done even when it doesn't line up for our schedule. So great to have you here. We just had you on All Access last week. Let's talk again really briefly about what Save Foods is and what you guys do. Can you give us an overview?
Sure. So thanks again for having me. Seafood developed a technology and product that extend the shelf life for fruits and vegetables using green technologies. So we are safe, we are healthy, sustainable, and we not only extend the shelf life for fruits and vegetables, we're also ensuring what we call food safety. So very efficient, again, a broad range of pathogens. And we're doing that all, again, using only green and safe technology.
Amazing. Okay, we have some really exciting new topics to dive into with you since we discussed last week. Let's talk a little bit about global population, right? There's some really interesting angles to what Save Foods is doing that we want to get your kind of humanitarian perspective on, if you will. Global population, we passed 8 billion just a short time ago, actually this year, I believe. It's a lot of people to feed, right? There's a huge amount of food needed in this world to sustain this kind of population. So with how large the issue of food waste is, and I'm sure you know as much about this as anybody, how much more efficient could we be in feeding the world than we are right now?
So if we just talk about fruits and vegetables, is mainly what Save Foods is currently doing, we're talking about more than 50% or close to 50% of the fruits and vegetables going to waste. So instead of ending on our plate, 50% of all the fruits and vegetables that are being produced today go to waste. And that's a huge waste. And we believe that Save Foods can be definitely a solution to most of it and be able to, instead of throwing that food away, be able to use it today. And it's definitely, instead of producing more food, we can just use the food that we are already producing. So we like to say, Save Foods is not only protecting, but also, we like producing more food.
100%. That makes sense. And that actually plays really well into my next question, right? When you're moving along this topic line, as this population continues growing, potentially hitting 10 billion by 2050, which obviously is a huge jump in numbers, but we've seen levels like that before. When you're talking about fixing food waste, is that a more immediate or achievable goal than just growing the food production itself? Or do you see the two working in tandem, hand in hand?
I think it might be working hand to hand, but as a first solution, immediate solution, let's consume what we're already producing. Of course, we might in the future increase the food that we are currently producing, but it will make time, and we have a solution that could be already put in place and make sure these people have food to eat. And that's definitely using solution like Safe Foods, where we can, instead of putting food away as a food that is already being grown, let's just consume it.
Absolutely. Really good point. Now, when you're talking about food consumption, issues with food purity and quality and all of the things that, again, you guys are looking to solve at Save Foods, it's estimated that about 10% of people fall ill from contaminated food each year. I actually had an experience with this myself just recently. Not a fun thing to go through, and many other people out there go through it every single day. So how do your products and what you do at Save Foods prevent food contamination? Can you take us through some of the details?
Sure. So basically, Safe Foods technology is working on protecting the fruits from all the pathogens, from all the disease. And we are very efficient, not only on the foodborne pathogen, the one like you unfortunately experience, like Salmonella, E. coli, Listeria, but also against the plant pathogens, which are responsible for decay. By the way, the numbers that we know today about food poisoning are in reality much higher than what's reported, because I'm sure, and I hope so, you didn't go to any emergency room. So your case of, illness was never reported. And that's the case of most of the people. So the number of food poisoning and food safety issues are growing and are huge today. And, being able to do two things at the same time is a huge benefit that Safe Foods is providing today.
100%. And let's take a look at a little bit of the history of this industry too, right? When you look at where you're at right now, what's different today about the food stability industry than it was 10 years ago, right? What are some of the biggest improvements we've seen? Changes, maybe changes for the worse or for the better. How has this industry kind of changed over the last 10 years? What does that roadmap look like?
So if you look at the industry 10 years ago, it's definitely, the issues of food safety, like we just mentioned, is something that's put in front of everything today. And there is new regulation on that direction. It's called FSMA in the US and in other locations, that food safety is a must today, which was not even 10 years ago. It was not like that like 3 years ago. And not only on that food safety, we're also talking about health and also sustainability. If we talk about general population health, the government, the consumers, everyone more healthy fruits and vegetables. We know that fruits and vegetables are healthy, but when they are protecting today using heavy chemicals that could be, that have a very bad impact on our health, but also on the environment, we see a shift, from the government, probably starting with all the consumers, where we see a trend of definitely reducing the use of chemical pesticides that are used today to protect the fruits and vegetables.
Understood. Okay, really good point there. Let's also talk about, if we're talking about how things have changed over the last 10 years, right? Let's talk a little bit about how COVID may have affected things, because it's certainly affected industries and people all over the world for the last few years. Did COVID change how food is sanitized and stabilized? Was there any positive effects of COVID that meant we had to be more careful and that led to the industry becoming better served or better regulated? Any changes that you would have seen inside the COVID era?
Yeah, I think one of the main things that COVID, changes the need for people or for countries to be self-sufficient in terms of food. That's one thing. And the second thing that had a huge impact on the industry, and especially on the fruits and vegetables on the fruits and vegetable industry, is the delay that are still happening during transportation. And it has a huge impact on waste, because shipment that we're usually taking between 10 to 15 days can take now today between 25 to 30, and sometimes even more. So you need now very good technology to protect the fruits or the vegetable during transportation. And this is had a very bad impact on the industry. which is very good for us because, with our technology, with our green technology, we can definitely protect these fruits and vegetables during transportation and make sure that all you are shipping can arrive in good condition and be consumed at the end of the day.
That makes total sense. Let's dig in on that thought a little bit further too, right? Minimizing the mileage between farm to fork, farm to table, right? That kind of food industry now, as we're seeing, it's become one of the most important aspects of when you're talking about a sustainable food system. One of the things we're going to have to focus on to make these goals kind of achievable, right? So the push for hyper-localized food production, urban farming growing systems, those are actually growing in popularity as we speak, right? Every single year, we have a lot of people that are focused on the sustainability of food, but the way it's sourced as well. If you look at how important food stabilizers and a more local, sustainable system are, do you see those as being a bigger part of our future moving forward?
Yeah, definitely. We'll see, more and more local farming. But again, it's only something that is very limiting. Local farming won't be able to supply the complete round population. And also that, we're talking about urban farming and everything is going indoor. But that's only a very specific type of, I would say, of herbs and vegetables. Definitely, we won't see, citrus fruit, or at least not that I know, that you would be able to grow avocado, citrus fruit, mangoes in greenhouse next to your home. So there is still a need to be able to provide these fruits and vegetables all around the globe. And by doing that, you still need to have this protection to make sure that your fruits can arrive in good quality. So again, here, we're looking at different type of technology, packaging, etc. But still, technologies still need to be developed, and we believe that safe food is definitely, one of the solution that is and will be continue to be implemented to be able to provide, this quality and freshness and to the people in the community.
Got it. I want to shift gears just a little bit and talk about the regulatory environment in Israel as opposed to the U.S. Are there any big differences in the way that you do things in Israel versus how things are done in the U.S.? Does that change your business model at all? What does that difference in geopolitical uncertainty look like?
So I won't concentrate only in Israel. I would say mainly Europe, because Europe is definitely, on the front hand of reducing the use of pesticide and move also to organic farming. Especially, they have a target to move 25% of the farming to be organic by 2030, and also reduce the use of these chemical pesticide by 50% by the same 2030. So it changed everything for the countries that are exporting to Europe. It could be the US, Mexico, all the South American countries, and also Israel. So today, all these countries, they are looking for solutions. And that's being a big advantage for safe foods. And we see, more and more packing houses and packers and growers reaching out to us, looking for green solution to be able to replace all the chemicals that soon are going to be out. And by the way, some of them are already on their way out, or we see a significant reduction already. And this is where, for example, in Israel, we have successfully implemented what we call a zero residues line, where we are able to implement safe foods products instead of the chemicals and be able to ship safely to Europe and comply with all the regulation for the European market.
Understood. Let's talk a little bit about the future too, right? If the US and the world by extension as a whole wind up falling into a recession or our markets continue to worsen, do you see there being any threat of people moving away from organic and non-toxic options and falling to the lowest common denominator of food for the sake of cost or for cheapness or ease? Do you see a recession being any kind of threat to the organic food industry and what you guys are doing at Save Foods?
So I'm not sure that we'll see a shift, because to consume organic at the end of the way is not only a way of life. A trend is really a way of life, and people really care about the health of their own and of their family and of their children. So we believe that it might be more difficult today to spend money on organic, but this is where product like Safe Foods could definitely help that market, because one of the main challenge of the organic market, and that's what make it very expensive, is they have a very short shelf life, and it's always local. You cannot ship it at long distance. So people cannot consume it in a way that would be how to explain that would be worth for the growers to continue to grow it organic. With product like Safe Foods, we could definitely extend the market reach, make it more I would say valuable for growers to continue to invest in that growing, organic growing, but also to extend the shelf life so more people could also consume it, and on the other hand, also reduce the waste that the people and also the growers will have, which will make at the end of the day will balance the cost and make it even available and affordable for everybody.
Got it. Okay, really interesting answer there, because again, with recession being such a big topic and the changing of the markets being such a prescient thing right now as we're looking at the global environment kind of change and shift, it's really interesting to get that kind of insight and to see what people's reaction may be as our markets and our world continue to change. So interesting insights. Let's talk a little bit about people being organic as a way of life. It seems to be a more recent trend, as of the last few years, and you even mentioned it earlier, eating organically and healthy and non-toxic is a way of life, right? It's a method of living and choosing these healthier options, right? So would you say that that's ramped up particularly quickly over the last few years? Why has it become so popular so quickly? And what's led to people valuing this organic lifestyle so much more in the last few years here?
So definitely, we see more and more people investing time and money in health. We understand that, if you want to live longer, we need to live well. And one of the ways to live well is not only to make sport, it's also to eat healthy. It's not. I don't believe it's only a trend that will pass and go away. We see definitely, more and more people understand the importance of food in their lifestyle. And I don't see that as a change. We see that more, and you mentioned it like correctly. We see a very fast adoption of this way of life, and especially when the governments, and you can look at the U.S. as an example, is spending so much money, billions and I want to say hundreds of billions of dollars in spending in healthcare. And one of the solutions could be just provide healthy food to people. So instead of eating a hamburger, have a healthy salad. So today, if you have to spend $1 for a hamburger and $10 for a salad, I understand why it's make me probably more easier to go for the hamburger. But if we're able to reduce the cost of the fruits and vegetables, why keeping them healthy, not using all these chemicals that are bad for our health? I believe that not only people will live healthy, but we will be also able to reduce the expenses of the health expenses of the government.
Understood. Okay, interesting. Like I said, again, the consumer insights here and why people are choosing to do this kind of thing now is really interesting to view. I do want to shift gears a little bit too, and let's talk about the business side of the company as we start to wrap up. Current cash positions for you guys right now. Are you looking to raise any financing? Do you feel like you're well funded going into the next couple of quarters in the next few years? What does the business side of Safe Foods look like right now?
So currently we are comfortable of the money we have in the bank, and we see that we're moving now. We're converting all the pilots we have performed for the last 18 months into converting into commercial customers. So we believe that we will have more than enough cash to continue. And as we see, we're happy to see that these pilots are finally converting into paying customers. So we really believe in the way, and we see that the market believe in us. So we don't expect any funding raised for the next at least 12 to 18 months.
Understood. Okay, and anything specific that investors should be on an eye out for in the rest of this year? Obviously, a very short couple of weeks here until 2023 begins, but anything in Q1 of next year or even leading into Q2 that we should have at the top of our minds to watch for from Safe Foods?
So this is definitely, it's an increase. We will see definitely an increase in our sales. I mean, that's the goal. We're working very hard to make it happen and to continue to convert these pilots into paid customers. Because the season of the citrus season, for example, just start in the North Hemisphere started around mid-November. So we're working really hard to continue to add more packing house or citrus packing yards in the North Hemisphere. And we believe that we will implement new products or new application for example, for berries, for table grapes, for apples in the next few months. So definitely that will have a positive impact on Q1, Q2, and hopefully Q3 as well.
Wonderful. All right, final question for you here as we start to wrap and we come into the close. It's more of a trending and kind of hot topic question right now, especially with all of the headlines out of Ukraine and everything else. President Joe Biden, with the war in Ukraine, highlighting the reliance of the West on Ukrainian wheat especially, and the fragility just of the global food supply chain as a whole. Biden's spoken about investing in resilient food systems. How do we build that resilient food system? Do you see food stability and sustainability specifically playing a role in that? What do you think we do to kind of build this resilient food system as we move forward?
So it's a very interesting question, is what do you think about being a resilient food system? Definitely countries must rely on themselves. We see it's a challenge. Not every country has the weather and the condition that they can, raise every type of fruits and vegetables or produce any type of food. It's definitely going to be a challenge. How each country would be able to rely only on themselves. In any case, I strongly believe that we are today consuming at least the, I would say, the not the third world countries are consuming much more than they are, or wasting much more than they are able to consume. And we will need the help of technologies also to be able to make sure that everything we are producing could also end in our plate and make sure this food is being eaten. And that's probably one of the first and immediate way that we can make sure that countries will have enough food to provide to their people, right? Everything you produce, make sure it's consumed. As we speak, we know that in every country in the world, more than or close to 50% of what is produced going straight to the bin will never get to the plate, and that's a big waste. And I personally think that things need to be changed, and that's one of the faster way to change it, right? No need to big investment and start build new cultures or plant anything new. Let's make sure that what we are producing can be consumed, and that's definitely one of the mission of Safe Foods. Make sure we can consume what we are producing while also providing healthy food to people.
Amazing insights. Again, what a pleasure hearing from you 2 weeks in a row. Dan Steibel, CEO of Israeli subsidiary Safe Foods, bringing us more information on what they're working on at the company and how their market is going to shift and evolve over the next few years and how they plan on keeping up. Dan, always great to talk with you. Thank you so much.
Thank you very much. Thank you again for having me today.
And welcome back, everyone. Once again, that was a pre-record with Michael Murray, none other. I guess they didn't want me to have a whole show myself. Michael had to sneak in there somehow. That was Dan Steibel from Safe Foods. That is Safe Foods Limited, listed on the NASDAQ, SVFD. And up next, we got a really cool project. This is a crypto project called Seasonal Tokens. And today, we've got a whole team with us. So let's bring them on. Hello, everyone. Welcome.
Thanks for having us.
Hey, could you quickly introduce yourself since we got a whole team?
Yeah, so I'm Ruan. I'm the creator, I guess. I created the tokens. I wrote the smart contracts and deployed them, wrote the white paper and so on. We also have Bogomil here. He's our marketing director. And we have Sam. He's our team coordinator.
Oh, that's awesome. So really quickly, as if, I'm in a 101 class, can you tell us what Seasonal Tokens is? What do you guys do?
Absolutely. So there's in traditional investing, there's an investing strategy called seasonal investing, and this is where you trade assets based on the time of year, because some assets are predictably more expensive at certain times of the year compared to others. So an example would be that real estate is more expensive in the summer, and orange juice is more expensive in the winter. So if you trade real estate for orange juice in the summer and then trade orange juice for real estate in the winter, then you can build up more and more of both of them. You end up with a lot of real estate and a lot of orange juice. So with seasonal tokens, what we've done is we've taken the same concepts, but we've replicated that inside cryptocurrencies. So we've got 4 cryptocurrencies, spring, summer, autumn, and winter, and their prices are designed to cycle around each other slowly over the course of years, just like traditional seasonal investments. So you can use the same investing strategy. And it's based on proof of work, just like Bitcoin. So all 4 tokens get harder to obtain over time. So once every 9 months, the rate of production of one of the tokens gets cut in half, and then that token goes from being the cheapest token to the most expensive over the following months. And that's what gives it this cycling property that allows you to use basically the seasonal investing strategy, but with cryptocurrencies instead of with traditional assets.
That's really, really fascinating. Let's talk about your team here. What does everyone bring to the table? And it is crypto. So are you guys doxed?
So I'm doxed with RugDoc. I'm not revealing full identities, but I'm not hiding my face. I'm not hiding my background. I think Sam is actually the team coordinator. He's the expert on the whole team. The team is not just us, but I'll let Sam talk about the team.
Yeah, thanks. So I'm mostly doxed on LinkedIn. You can see our team page on the website. We have our entire team on there. Not all the team are doxed in that sense. We have more of a quite a big, large background team. You could say that the 3 of us on here are sort of the main figureheads. We coordinate the whole team at large. But with any typical DeFi project or just crypto project in general, you do need that backbone, and that's what we have in the background, which you can find mostly on Discord. So for anybody looking to invest or jump in, if you go to our Discord, you will find the entire team on there. Always happy to help and always ready to chat. But for the rest of us, like for example, like I said, I'm doxed on LinkedIn, and as a team, we are pretty much as transparent as you can get in that sense.
Well, that's nice to hear. Let's dive back into the mechanics, because that's really what this is all about, right? Can you tell us in a little bit more detail how this all works? How are these coins interrelated, or these tokens rather? And how does the protocol actually adjust these relative price actions?
Yeah, so they're all ERC20 tokens. They're on the Ethereum network, and it's not like most proof of work cryptocurrencies have a blockchain of their own, and the proof of work is used to generate new blocks and to issue the currency. In our case, we're using the Ethereum blockchain, so we don't generate new blocks with the proof of work, but so the proof of work is just to provide a cost of production to the individual tokens, and so one of the tokens is always produced at the fastest rate, and those other tokens are produced at a slower rate. So once every 9 months, the token that's produced at the fastest rate, which is the cheapest token to produce, becomes produced at the slowest rate, and that makes it the most expensive token to produce. So what happens after that in the following months is that the market adjusts to the lower supply and the higher cost of production, and that's what drives the price up above the other tokens over the following months. And people, they do the proof of work on their home computers or using specialized mining equipment, and then they submit the solution to the smart contract on the Ethereum network, and then the smart contract receives that proof of work, checks that the proof of work is valid, and if it is, then it issues new tokens to the miner who produced that work. And basically that's how the cost of production changes over time, and that's what causes the prices to cycle around each other over the course of years.
Now, most people would be familiar with this kind of concept from Bitcoin, and when Bitcoin halves. Can you talk about that?
Absolutely, yeah. So yeah, once every 4 years, the rate of production of Bitcoin gets cut in half, exactly the same as with the tokens. And what happens over the following year is that the price of Bitcoin rises. It tends to rise very dramatically, and what happens after that is that it reaches a peak, it kind of ends in a bubble, and then the bubble bursts and then goes into a bear market. And that's kind of where we are now. There's a crypto winter that's happening now, which is, you could attribute it to the terrible things that happened during 2022. There was the Terra Luna collapse and the FTX collapse and Celsius and 3 hours. A lot of businesses went bankrupt, and but at the same time, that happens almost every time that Bitcoin goes into a bear market, because a lot of crypto companies get into distress. They don't have as much collateral as they thought they had, and so on. So it's a predictable cycle that Bitcoin goes through every 4 years. And it was basically from observing that cycle that I was thinking that what we would like is to have an investment that doesn't go up and down through these bear markets, but an investment that kind of continually increases in value. And if you're just holding Bitcoin, then you can't get more Bitcoins just by having Bitcoins. But what you can do with seasonal tokens, because you can trade the more expensive tokens for the cheaper ones, and then they become the most expensive later on, and then you can trade again, you can keep increasing your holdings over time. So it has a lot of the same properties of Bitcoin economically, meaning that they become harder to obtain over time. So for example, 20 years from now, all 4 tokens will be produced at less than 1% of today's rate. And so they become more expensive over time, or more difficult to obtain over time, just like Bitcoin. But there's also the possibility to gain more of them over time by trading them in a cycle.
Can we talk about the proof of work here for a second? Why choose proof of work? You touched on it a little bit, but let's just talk about it a little bit more. And I mean, for a lot of viewers here who aren't might have some ideas about proof of work because it's maybe not been in vogue for some time because of the whole market is moving towards proof of stake.
Absolutely, yeah. So the reason, there's a couple of reasons, I guess, for choosing proof of work. One is the basic economics that if you're producing something and you're producing it at zero cost, then it kind of has a natural market price of zero, and you have to use some tricks like burning the tokens or doing something to remove them from the market in order to support the market price. Whereas if you're using proof of work tokens, then there's a cost of production, and you can see that you can see it most clearly with Bitcoin. When Bitcoin has halving, when the rate of production gets cut in half, then a lot of the miners go bankrupt, because what happens, or well, not bankrupt, at least they have to stop mining because it's no longer profitable. The reason is that the cost of production instantly doubles, but the price doesn't double instantly. It takes months for the price to respond and for mining to become profitable again. So about half of the miners basically stop mining when you have one of these Bitcoin halvings. And what you can see from that is that it's the proof of work and these halvings, it causes a real effect in the economy. People have to change their economic decisions. And basically, in order to give the tokens an economic value that doesn't depend on tricks, you have to basically make it hurt to produce them. So it's not easy to get these tokens, and it's getting harder and harder. Whereas if it was a proof of stake, then that would mean they would effectively be produced at zero cost. And that would mean that you would need to do something additional in order to support their market price. So that's one reason, that's the purely economic reason. But there's also a legal reason, which is that proof of work tokens and coins, they're recognized as commodities rather than securities. And it's pretty likely that it's going to remain that way because they don't have an issuer. If you have proof of stake coins or tokens, basically they come into existence because there's a transaction that bears a valid signature that basically issues them. And when financial instruments come into existence because they have a valid signature from an authorized signatory, that means that they can be classified as securities, and that would make them much harder to trade on centralized exchanges. It means they're regulated by the SEC, whereas with proof of work coins and tokens, they're regulated by the CFTC. It's much lighter regulation, and it's much easier to trade them. And also because they're proof of work, they have no issuer, and that means that they're not accompanied by any promise. So there's no promise that can be broken, and that means that they're just it's kind of like diamonds or like gold, anything else that's mined. It's not actually like a document signed by a corporation that says that this thing now exists by fiat just because we've declared it to be so. So basically that gives it a better legal status, and it makes it more likely that they're going to survive and be easily tradable far into the future without any regulatory barriers.
Now, the tokens have been live, your project's been live for some time now, and so now you have some real world data to compare your thesis to. So tell us about that. How's it been going?
Absolutely, yeah. So it's been going pretty well, actually, even better than we expected. So what happened was that we knew that by producing the tokens at different rates and having some of them cheaper to produce than others, we knew that some of the market price would reflect that, and there would be one token that would be the cheapest to buy and another token that would be the most expensive to buy, and so on. But what we didn't know is when we cut the rate of production of one of these tokens in half, we knew that eventually the market price would respond. We didn't know how long it would take. So what I gave it 9 months between one halving and the next, because that seemed, looking at Bitcoin, 9 months after Bitcoin's halving has happened, the price has definitely responded. And you can see that basically it's the market has a response during that time. But with the tokens, what happened when there's only been one halving so far. So it started, we started mining in September of 2021. And then 9 months later, at the start of June of this year, the rate of production of Spring was cut in half. And then Spring became produced at the slowest rate instead of the fastest. So we didn't know how long it would take the market the market price to start responding. And we didn't know how long it would take for Spring to become the most expensive token. But I thought that because I was watching Bitcoin, I thought there would be a delay of a few months, because that's what happens with Bitcoin before the market price starts to respond. But what actually happened was that the price started trending up immediately. And I think the reason for that is that with Bitcoin, the price that you're looking at is the dollar price. And that means the entire economy is kind of involved. There's market sentiment and interest rates. Everything that affects market prices is also involved in the Bitcoin dollar price. But with the tokens, we're comparing the price of one token to another token. And the number of winter tokens that a Spring token is worth, that doesn't depend on interest rates or how popular the project is or investor demand. It basically just depends on the rate of production and the cost of production and the number of new tokens coming onto the market every day. So it started to respond immediately, and we've had months of data since then to see how fast the market responded. And the result is that it's moved. The prices have moved about 1% per day towards the target ratio. So initially, the ratio of the four prices was close to 5, 6, 7, 8, which was the same as the ratio of the amount of time it took to produce each of the tokens by mining. And after the rate of production of Spring was cut in half, that ratio changed to 10, 6, 7, 8. So it then took, you'd have to mine 10 minutes of mining Spring to get the same number of tokens as you would get by mining Summer for 6 minutes. So after that happened, the price, the ratio of the prices started to move from the ratio of 5, 6, 7, 8 towards the target ratio of 10, 6, 7, 8, and it moved about 1% a day. So within about 4.5 months, it had basically reached the target ratio. And that's very good, because the market is responding efficiently, and it also means that in terms of people who are trading tokens for more tokens, there are two kind of phases within the 9-month period. There's about 4.5 months when you're waiting for the season to change, for the prices to go from their original ratio to the new target ratio. And then you have 4.5 months when you can trade tokens for more tokens. So there's basically two phases, one of which is just waiting for the season to change, and the other of which is basically taking advantage of the fact that the seasons have changed and that you can trade tokens for more tokens.
Is there how does the psychology of the people involved and the traders here affect this? I mean, because people ostensibly trading within this ecosystem know about the protocol and this mechanism, and so is there an effect of the kind of the anticipation of these movements?
That was something that we also didn't know when we started. We didn't know how. We thought obviously there's going to be some effect from speculators and people trading in anticipation of the halving. What we did see was that on the day of the halving there was quite a lot of volatility and the prices moved around a lot. But that was temporary. After that, then like a few days after that, or maybe a few weeks after that, the prices had basically returned back to their ratio of 5, 6, 7, 8 and started to gradually drift upwards. So I think what happens is that with speculation and with people who are trading in anticipation, that's a short-term effect. They do it at certain periods of time, and they do it like when somebody speculates, they make a trade and it's a one-off. But with miners, the miners are producing new tokens every day, and they're adding them to the market every day. And it's things that happen on the market every single day that kind of bring the prices along their trajectory and that kind of set the price.
That's really interesting. Now we've got only a few more minutes here, so I want to zoom out and talk about crypto at large. And we can't talk about the market right now without talking about what just happened with FTX. So I want to get your guys's. What's your view of this? What does it mean for the market? And you already listed them, but there's been a number of these really high-profile crashes, and there have been, I mean, for years. Is this something that investors just always have to look out for in crypto, or is there going to be a time where crypto is more mature and these things are exceedingly rare?
So I think what happens with there are kind of two different classes of cryptocurrencies, and there are two kind of ways to invest in cryptocurrency. There are tokens or coins and tokens like seasonal tokens and like Bitcoin and like Litecoin and Dogecoin and so on. If they're produced by proof of work, and even Ethereum when it's produced by proof of stake, these are cryptocurrencies that are not corporations. They're not issued by a corporation, and they're not corporate liabilities. So when you have cryptocurrencies like that, they're not businesses, and they can't go bankrupt. So those are going to survive, and they're not going to disappear because there's no business to go bankrupt. But if you have something that's issued by a corporation, like FTT was a token that was issued by FTX, that dropped to zero value, and that's because it was basically backed by a business, and people who were buying that token were essentially investing in a business rather than investing in a commodity. So if you're buying Bitcoin, it's produced by proof of work, it's a commodity, and it's not a business. So I think what's going to happen, or what should happen, is that investors should learn from these corporate failures and learn that cryptocurrency isn't necessarily a pure commodity investment, that some cryptocurrencies that you're investing in, you're actually investing in a business. And I think when you're doing that, then there's a risk that the business could fail and collapse to zero value. Even the Terra Luna, that was an example. They weren't explicitly, it was a stable coin, and it had an algorithm to try to keep the prices stable. But ultimately, it was a business that was backing that up. They had collateral, but they didn't have enough to support the price. And when the market value went, or the market cap went to $50 billion, and they only had $5 billion of collateral, that wasn't enough to keep the supported price that big. So I think that it will be painful, and there'll probably be more bankruptcies, but this will be a good time for investors to learn the difference between commodity cryptocurrencies and corporate liabilities, which is basically what the other cryptocurrencies are.
Well, we got to let you go, but I want one last, just a real quick hot take question. Cathie Wood famously predicted Bitcoin would top 1 million by 2030. So is she on track? And if not, where do you put that number at?
It's possible. It's certainly reasonable. So what happens? Bitcoin goes up very dramatically after the year after a halving happens, and the next one is coming up in 2024. So we can predict that 2025 is going to be a good year for Bitcoin because the market will be responding to the cut in supply. And then the same thing will happen in 2028. There'll be another halving, and 2029 will be another good year for Bitcoin. So there will be two large Bitcoin upswings between now and 2030. We're not sure how high it can get. Hopefully it will get to 1 million, but I can't guarantee that. But what will happen is that it will go up and down, and it will continue its 4-year cycle. Well,
thank you. It was a pleasure talking to you guys today, and look forward to talking with you further.
Thank you. It was great to be here.
All right, that was Seasonal Tokens. And now we have Dennis Calvert. He's the CEO of BioLargo. That is traded on the OTCQB under BLGO. That's BLGO. Dennis, welcome.
Hey, Johnny.
How you doing?
Hey, good to be here.
It's a pleasure to have
great.
you back.
Yeah, thank you.
This is my first time interviewing you, but you're a regular here.
We've got a great story, and I think updating every couple of weeks is pretty wise because there's so much going on. So we got a lot to talk about.
That's awesome. Well, let's dive right in. As I said, you have been on here, but really quickly, what do you guys do?
Well, the company is a sustainable, focused technology development company and services company, providing solutions for some of the greatest problems that face our planet. Things like clean water, clean earth, clean air. And we have a couple of catalysts. We have 8 technologies. We've assembled through about 15 years of R&D. It's incredible. We got a couple of big winners in the portfolio that are now shining stars because of the growing revenues and the expansion through channel partners. So those catalysts, we call them catalysts because they really can move the needle, right? Move the needle for value and revenue increase and ultimately profit. And so we're at that moment watching some of these technologies that are legacy go through an extraordinarily long development cycle and now start to shine. And so we should talk about those because they're really pretty cool.
Well, I do want to get into that because you touched on
Sure.
this, but your company has been around and you've been putting on a lot of work into R&D, and now you have 8 mature technologies. So what does this
Yeah.
mean for the company and your future?
Yeah, well, so and new technology is coming too. I mean, that's the
Mm.
crazy thing. We've got extraordinary science and engineering talent here at the company, and it's a unique innovation company that we literally every day ask ourselves where we're going to make a big impact, right?
Mm.
And so that's interesting because most companies can't do that, and we've actually been doing it for 15 years.
Mm.
Now, some of these assets took a long time to get adoption. So the beauty in the portfolio is that the companies survived the adoption cycle.
Mm.
Now we're at a spot where we're seeing innovation, find market share. Our thesis is pretty simple, right? Come up with an idea, target big solutions that are meaningful, go make a high impact. So all purposeful investments on our side to do something great for people on the planet, right? So as we've done that, we invent it, we prove it up, we find first commercial adoption. And then the core thesis at that moment is how does a small company go impact the world? Well, you do it through partners.
Mm.
So we're a team that brings the innovation to the marketplace through a series of relationships. Sometimes that's a joint venture, it's licensure, it's channel partner selling. And again, because we've got this innovation that is either a machine or chemistry or a design. I mean, it's a whole eclectic group of resources focused on clean water, clean air, cleaner earth. We even have a medical portfolio too. So very fascinating company. It needs a deep dive. There's a lot going on. But the big things like our POOF product and our PFAS solution are current, real time now happening, and they're significant.
Well, let's talk about those. Talk about POOF first.
Yeah, I think I sent you the links. We could pull up that POOF, poof.com, right? So let me describe this. If you want to pull it up, it'd be great.
Can we get that up?
Sure. So poof.com. So here we go. Yeah, and there's a little video. Maybe show 20 seconds because it really.
This is POOF, the most powerful pet odor eliminator in the world.
No harsh chemicals.
No harsh chemicals at
No
all.
fragrances.
None.
Seriously?
Oh,
It's safe for people, pets, and the planet.
There you go. So let me tell the story real quick. And now that everybody's
That's
seen it,
pure ammonia.
there you go. So I really want to encourage people to go see the site. Okay, first of all, now this product just launched in Walmart on November 11th, about 680 something stores. And it is selling really well. And so the way that works at that big retail side, it then expands all over the nation over time. It takes, they've got 10,500 stores. So POOF has told us that their target for this product is to get in 25,000 stores over the next 6 to 9 months.
Wow.
Now, we did a business deal with this team. This is our partner. The chemistry, the science that makes this possible is one of the core inventions in our portfolio. We started this project about 2 years ago, year and a half, 2 years ago. They launched their first sale on December 26th of 21. So that's about a year ago. Okay. And they're breaking records as we speak. And they're really a significant financial catalyst for our company as well as a supply chain partner. So we did a business deal, and the business deal is that they're using our chemistry, of course. So we're also the supply chain partner. So we manufacture that product. We make a small margin on manufacturing. We participate in the sales side for a small royalty. And we've also bargained as a 20% equity holder once the brand is established and sold. Now, their stated target, that's our partner at POOF, is to get to 100 million annual run rate, at which point they believe the exit will create a 3 to 7x. So that's somewhere around 350 million.
And you have 20%.
700 million on the exit is the goal. Okay. And we're a 20% equity holder in that exit. In the meantime, we're the supply chain partner and the innovator that made this possible. Now, the reason this is important for an investor is to understand two things. One, this is going to grow on a straight line mechanism. They've been spending about 100,000 a week. Sales have topped 100,000 a day.
Wow.
Okay. And Walmart just signed up and literally they've also, and expanding. Now we know it's expanding. Okay. And the other thing that's happened is they've got the who's who of national retail accounts signed up or in the queue coming. Now, remember, these big national retailers, they don't flip switch and do it in a month. It's like 6, 9, 12 months before you see those products on the shelves. But all of the major retailers in the channel are now coming on side to participate in this product rollout. And our partner at POOF is direct to consumer merchandising with these 2-minute, 45-second, 30-minute ad spots. And literally, once you see it, I always say you can't unsee it. And the reason that's so is because it's all over the national networks. I mean, it's everywhere.
Well, the
And
spray in the mouth is compelling.
Well, it's safety, right? I mean, that's all
Yeah.
that message really is. It's not meant to be a mouthwash or anything like that. But I will tell you, we actually make a mouthwash. But
Really?
that product's not a mouthwash. Sure. Yeah. I mean, this chemistry is a platform chemistry that literally can spawn 100 products. Okay.
Wow.
Now, what we license to our partner at Poof is the use of the chemistry for pet odor control. So in our portfolio, there's a whole menu of other products that are available. So this is just one example of a commercial success, driving our revenue, driving our adoption rate, validating our science, validating our business model, making money, right? And really propelling the growth for the company. So it's an exciting story. And the numbers I always say we're just getting started, because the numbers are going to climb so dramatically. So we're forecasting, we've done about 100% growth per year over year for the last few years. And quarter over quarter, we've had increasing revenue for a whole bunch of assets, services, PFAS, we're talking about that. Poof is a big deal. We also have industrial odor and VOC control. There's a lot going on at BioLargo. They're all kind of growing, right? But Poof is now going to go like a lot faster. I mean, they're forecasting, 3 and 4x revenue climbing easily. And so we see that product climbing to about $1 million a month for BioLargo over the near term future. Now, not in 30 days. Okay. It's going to take a little longer, but just think about it. It's getting adoption at all the national levels with all the retail accounts. And the stated mission is really simple. They want to get to 100 million in run rate as fast as possible. And they've got the money and the resources to do so. So and of course, the business model is validating the efficacy for the product. So this is a great catalyst in BioLargo to show how the technology's found a commercial home, went through 8 years of development, established our first market positions in the industrial side, right? And then have this value proposition that, number one, is it's a great product. It performs. It does exactly what we say. And then secondarily, it's safe. It's not going to hurt a thing. And so that's remarkable. Yeah.
So the 100,000 daily sales that you talked about, does that include you said Walmart just signed up? Does that include Walmart?
That was before Walmart. That was direct to consumer. Yeah,
Okay.
That was before Walmart. And again, that's retail. So I want to make sure that everybody gets it clearly that we're the supply chain as a wholesaler to a channel that's sold retail. So that's not all our revenue. Okay. That's the revenue on the other side, which is the retail side. And then we work generally probably around 25% of that is our top line number. And then we're working on a profit of that, which is a cost plus arrangement on the supply chain plus 6% royalty. That's our revenue stream. Well, that's a good revenue stream, especially when things are growing so fast. And literally this one product is, as it continues to grow, will take our company to positive cash flow and has the potential of generating a profit for the company, which is a big deal. And that's one, I can't emphasize it, one product in a portfolio of dozens and dozens. And
I understand it has a medical application as well, the same technology.
It's similar. Yeah, it's not quite the same, but it's the same active ingredients. Okay. So it has the active ingredients, but when you go to the medical field, you got a whole nother regimen that you have to go through.
Sure.
In terms of QA, QC, what you say, what you don't say, how you market. And that work has cleared 510K clearance. We have a company called Clear Medical, and it's being used as a wound irrigation product, like in the surgical suite. So literally in the body, open a wound, surgeons says irrigate, flush out the right. And when they do that, the liquid goes in and comes in contact with bone and tendon and tissue.
Wow.
And it acts as an antimicrobial, and it does no harm to tissue. And it's a leave-in product cleared under 510K for use in surgical suite settings. Yeah. Safe for the body. Safe. That's the key, right? And in fact, it's an extraordinary claim. It also has some biofilm efficacy. It's a leave-in product. It's got residual activity. And again, it's not quite the same, but it has some similarity of safety profile in particular. Now we've got early sales there, not yet to brag about, but we do have sales. And so it's important to remember the thesis, invent it, prove it up, find your way through the jungle to get to success, get through the regulatory barrier, and then find first commercial adoption. That's where that technology is at in the medical field. Why is this important? Because the thesis is the same. Once you get to that spot, you can make the deal. Right. And so that company has 3 channel partners in negotiation, not done yet. So, not time to have a parade yet, but it is, we believe it's coming. And again, it's a huge asset. Now that asset alone, we spent $8 million getting it through regulatory. It's an incredibly, long, hard journey, but we did it. And so then the thesis is once you get to that spot where you've got proven commercial viability, we outsource manufacturing. We didn't go build an FDA manufacturing facility. We didn't build a co-packing facility to make poof. We outsource those products. So really our overhead is static and our revenues climb. That's the point. And poof has proven it dramatically. Last quarter, Q3, we reported a profit in O&M. That's O&M Environmental, which is the operating unit that has that asset under license to poof. And it threw off a $400,000 profit in the fourth quarter or the third quarter. All of that trending is going to continue. And if you just watch that number, we're going to see that number grow. And as it grows, it has the capability of covering the entire company. One product. I can't emphasize it enough. Anyway, and we have a whole portfolio, right? So watch poof, go to it, look for it at Walmart. Stay tuned for more retailers. You can go online. It's available on Amazon, of course. It's winning all kinds of awards. And so it's a real cool one. And we should talk about PFAS.
Yeah, let's talk about PFAS.
So PFAS. So again, we have a website. We should show it. We don't have to go through it all. Just to show people, it's bestpfastreatment.com. Bestpfastreatment.com. Now that's a site that's really focused on industry, but investors need to see it and touch it because it's an extraordinary innovation that allows us to extract PFAS from very large streams of water. So in there, there's brochures, there's technical brochures, there's a video, all kinds of information about the asset, the technical innovation itself, and what it can do to make clean water safer for everybody, including industry and people. So this backstory is really important, and that's the value proposition claim set right there. So let me just summarize. It saves a customer money. It works in all kinds of different waters, and the waste stream from byproduct of extraction of this compound from a stream of water or soil is 1/1000th that of the competing technologies. And there are a lot of competing technologies. So our value proposition is broad, saves money, and has a great environmental profile, right? In the way that it works. Now, the backstory is fascinating. PFAS, P-F-A-S, PFAS. If you don't know about it, do an internet search, PFAS. It's everywhere. And literally it's everywhere. Meaning these are fluorinated compounds that were used to create nonstick coatings.
Like C8?
Right. So So things like Scotchgard and Teflon are big brands. There's actually about 30 or 40 producers who are considered part of the polluting community that made these nonstick coatings. Big ones have faced litigation all over the world. It's incredible.
Sure.
Often called the contaminant of the decade, and some people say of the century. And because it was sold for over 40 years and it was everywhere.
And they call them forever chemicals, right?
Forever. You know what that means? It means they're made to withstand the natural degradation of nature. And they last forever. It turns out lasting forever in minute particles is really not so good.
Yeah.
There needs to be a natural life and death cycle to refresh, and those don't refresh. So what happens is they accumulate. If they bioaccumulate, they're linked to adverse health effects like birth defects and cancer. Oh my goodness. So there's a movie. I'd encourage anybody to watch it anyway, because it's a great movie, Dark Waters.
Yeah.
Right, with Mark Ruffalo. And it's about 3 years old. I think it's on Netflix. It's a great movie, though, because it's like an Aaron Brockovich story. And it chronicles the legal journey of Robert Delott taking on big corporate. And the bottom line is it highlighted sort of this thing that has been going on for 40-something years. And now there's no moss. I mean, this is like, we're not going to put up with this. And so the government's taking a very aggressive stance. The EPA is regulating this to such a high degree. At first, it was thought to be somewhere around a $60 billion market, and that was anticipating about a 70 parts per trillion testing limit in water and earth, okay? 70 parts per trillion. That means like a couple of grains of sand in the size of an Olympic swimming pool.
Yeah.
Well, it turns out they're going to regulate some of these compounds that are particularly dangerous all the way down to 3 and 4 parts per trillion. Okay, that means the fraction of a piece of sand in the size of a swimming pool, which means if you're testing to that limit, and that's the allowed limit, who's untouched? This is being tested in mother's breast milk. It's in your body. It's in the polar ice caps. It is literally everywhere. All right. Now, 3 years ago, we started this journey to create a solution, and it really complements, again, the business model. Remember, invent it, prove it up, find a great spot to make an impact, get it to the first commercial adoption. Well, we signed our first customer engagement about, I want to say 3 or 4 months ago, and it's going to end up being a huge custom project. Probably will come in at around $7 million a year for about 10 years. You have to think about this as a super fund remediation project. This is a massive body of water, highly contaminated, highly regulated, under the watchful eye of the EPA saying, clean it up. Okay. And so you have to get perspective. And this is just one. Okay. Now, how many are there? There's literally thousands. Okay. So we set up a national sales organization through channel partners. We've got about 7 or so signed. It covers 45 of the 50 states. And now on a daily basis, we're processing the customer profile of projects where our technology can really shine. And it's a backlog that'll choke a horse. And we're very excited about it. Now, I will say it's not fast. These are huge capital projects. So when somebody says, okay, let's do it, it might be 6 months or a year before you actually break ground. But when you do, you're looking at projects in that $5 and $10 million per range that will run for years. Okay, so this company, BioLargo, is going to be busy with PFAS for the next 20 years. I mean, it's and internally we have a staff that have been doing remediation for 20 and 30-year careers. So this is not a bunch of young, bright-eyed, bushy-tailed entrepreneurs. This is hardcore, experienced senior veterans who wrote the book on how to do it, or at BioLargo now as a team, pulling all these resources together to go out and solve big problems. And so we have standing in the eyes of the commercial market because we do know we are literally expert. And one of our specialists is Tanya Chandler, 22 years in the water business. She's become our internal champion for expert knowledge about regulatory front. She's being invited to speak all over the country now about where we're at, where it's going, the implications to each customer, your technology choices. Because what happens is when a problem like this surfaces, people tend to go to what they know. Well, let's go pull some carbon systems. Well, okay, guess what? Carbon's only going to take you so far. It won't get to the very, very, very low parts per trillion. We've actually proven removal to a level of non-detection. Non-detect means you can't find anymore.
Yeah.
Right. Scientifically, you've removed so much that you can't find the contaminant at all, which means in the layman's terms, you took it all out. In science terms, below the level of detection. And so the idea that you have an innovation that can do that at 1/1000th of the environmental footprint, you need to be thinking about where the regs are today and where they're going to be in 6 months and where they're going to be in a year, because it takes a year to get the stuff in the ground, and you don't want to go spend $20 million and then find out it won't meet the standard. And that's what's happening in the marketplace. The first project that we took on is actually replacing a traditional, well understood historical carbon system because they can't stand it. It's not doing the job that they need, right? And so we've been brought in to replace it with our innovation and help them clean up and meet the regs. So PFAS is going to keep us really busy. So there's more at the portfolio, but these are two big ones. And I really urge people to take a deep dive when you really understand the company. The business model is so sound. It's got great leverage, and the hardest work is done. And now the fruit is bearing out. And so we think it's all
really exciting, Dennis. And I think your tagline is "We make life better," right? And from what we talked about today, it seems like you guys are doing just that.
It's purposeful. There's what's called Sustainable Development Goals. You ever heard those? SDGs for the United Nations. Okay, you be talking about checking the box. I mean, we check, half of them. I mean, it's crazy. And so as a result, especially where you find investment professionals focused on impact, they love our company. I mean, they just love it. And so we got to get the word out. Of course, it's a small company about to be a big one, and we're happy to make an impact. Of course, it's been 15 years, and the validation that we're seeing now is astonishing. And as I say, thank God it's finally happening. So let's go out and do it good.
Awesome. Well, good luck, Dennis, and thank you again for being on the program. It was a pleasure.
Thanks. Take care.
Yeah, you take care too. All right, that's our program today. Thank you all for bearing with me. Your substitute teacher, Johnny Rice, here for Benzinga All Access on December 9th. I want to give a thank to Aaron Thomas for being the producer today. And thank you, guys. I had a great time. So I hope you did too.